What's up, everyone? It's Karthik with MoneyVest. So with a 7-day win streak, Jerome Powell talking next week at the Jackson Hole Symposium in Wyoming. We've got lots to unpack in this video, and I'm also going to break down some historical Jackson Hole Symposium where both Jerome Powell and Janet Yellen has spoken. And we're also going to talk a little bit about the seasonality over in September. So lots to unpack. Make sure that you drop a like and of course subscribe to the channel because we have made some progress, but still 34% of you guys are watching the videos, are watching the content, and I know you guys are finding these videos helpful because I see the comments all the time but are not subscribing. So I would really appreciate if you just hit the subscribe button and also share these videos with your family, friends, other traders, investors in your communities, in Discord channels, WhatsApp groups, Telegrams, Facebook, whatever it is that you use, so that we can grow our community and get to that next target of 82,000 subscribers. I would really appreciate that. And I always do. If you have any questions, feel free to check out the links down below, comment or email me, and also you can join our Discord with that 16% annual discount as well. So stock market today, S&P 500 in the best week of 2024 as revived bulls resume the rally here. So this right here was the S&P 500 up a nice 3.9, almost 4% recovery here. So this right here was the entire two back-to-back green candles from the markets. Of course, last Monday we sold all the way down to these levels where we're trading at just under 5,200, and of course last week we got bought up to pretty much close break even, and this was that continuation of that momentum. And now we have seen 7 consecutive days green in a row, which I'll go over in just a minute. This right here was the NASDAQ composite, up over 5% on the week here. So everybody holding on to technology stocks, everybody who bought back in last week on Monday, on August 5th, is sitting pretty. And our community did some heavy buying Monday, Wednesday last week, and of course continue to pick up more shares, selling CSPs, closing out our calls, so doing really well. So if you want access to all the trade alerts, link's going to be down below. We'd love to have you on board because, you know, as I mentioned before, trading and investing is all about probabilities. And I've also included for this market bias structure, this green and this red that you see on the chart, that we have included. And I'm also going to be including and talking a little bit more about this market bias indicator as well. So the Dow Jones trading at well over 40,600. So very strong momentum coming in, over 1,100 point increase here in the week, up almost 3% on the day. And this right here is the QQQ's order flow distribution in terms of billions of dollars. So we did see a net inflow of just over $200 million, so $0.2 billion. So we had inflows of $4 billion, outflows of $3.8 billion, of which 2.47 large inflow orders, $2.47 billion, and $2.25 billion of net outflows, and then medium orders of $1.26 billion and 1.25 or $1.28 billion, and then small orders also coming in at just under $500 million. But overall, we did see net inflows into QQQs, and as a result, of course, this ETF was higher, just barely, up over 13 basis points. And this right here was the past week. As you can see, the large scale orders in the last 5 days, we did see a lot of institutional investors or buyers stepping in on August 13th. Then once again on August 15th, which was yesterday, a very green day. And then of course, August 16th also, which is today, just a small amount of buyers stepping in, $218 million. So over $500 million worth of net inflows in large scale orders on August 13th and 15th of this past week. Now, it all comes down to this. This is what traders have been waiting for. This is what investors are betting on, is this man right here on the screen. What is he thinking? What is he going to say? What is he going to do? Because next week is the Jackson Hole Economic Policy Symposium. And the theme for this year's symposium is reassessing the effectiveness and transmission of monetary policy. It's going to start on August 22nd. But our very own honorable chairman of the Fed, Chairman Jerome Powell, is going to be talking on August 23rd, which is literally a week from today. So next Friday, August 23rd, is when Chairman Jerome Powell is going to be giving a speech at 10 a.m. Eastern to address the entire world, talking at the 2024 Jackson Hole Economic Policy Symposium in Wyoming. Now, I took the liberty to go over a spreadsheet. So this right here is the entire spreadsheet that I essentially took the data for. And this is going back as far as 9 years. About 8 years, because this is the 9th year that we're talking about. So I went back as far as 2016 to better understand how the markets have performed one day prior to the speech from the Federal Reserve Chairman and the day of the speech from the Federal Reserve Chairman. Now, in most recent years, we've seen a lot more volatility. So what you'll notice is that of these 8 years, there's been 6 times Jerome Powell has spoken, because he's been the chairman of the Fed for well over 6 years, and Janet Yellen for about 2 years prior to Powell, going back as far as 2017 and 2016. So Jerome Powell, since 2018, has been front and center talking about monetary policy, in charge of monetary policy, Federal Reserve Chairman. And of course, every time he has spoken, there's been significant amounts of volatility. For example, in 2023, on August 24th, 1 day prior to his speech, markets dropped over 1.3%, recovered on the day of the speech by over 0.5%. Then on 2022, August 26, 2022, and again, 2022 was also in the middle of that bear market, we were up 1.4% 1 day prior. As soon as Jerome Powell took on the microphone, markets sold off aggressively, down over 3.3% on that day when Jerome Powell started talking. 2021, 1 day prior, we were down over 0.5% on the day of, up over 88 basis points. 2020, perhaps the only year where both before the Jackson Hole speech and during the speech, pretty much on that day, we were up. So we were up both 1 day prior and on the day of Jerome Powell's speech. This is the only instance where we are up on both days, 1 day prior and on the day of. Every instance we're either up on the day of or 1 day prior, and one of those 2 days are red. This right here is 2019. Both of them are down, and this is perhaps Jerome Powell's only time when he is actually even 1 day prior and on the day of, the markets are down, and on the day of, we were down over 2.5%. That's a pretty big sell-off. And then 2018, 62 basis points higher, S&P 500 on the day of the speech, and down 17 basis points 1 day prior. And Janet Yellen also does not have a super good track record. I mean, the markets are basically flat, so it just goes to show there's not a lot of volatility, and there wasn't really a lot of weight as to what Janet Yellen was saying, as opposed to Powell. Powell at least creates more drama. There's more entertainment, and the market actually moves a lot more when Powell is speaking versus Janet Yellen. So average loss of about anywhere from 1 basis point to as much as 45 basis points 1 day prior or on the day of, and median loss of about 16 basis points on the 1 day prior, and on the day of about 17 basis point gain. And the probability is for us to see 1 day prior for the markets to actually go up is really low. It's only 25%, so 75% probability that we're going to see the markets go down 1 day prior to Jerome Powell's speech, and on the day of, only 37.5% the markets are going to go down. So that is going to be some historical probabilities right there. And if you take a look at every time that Jerome Powell has spoken, the average loss has been about 60 basis points on the day of, and 1 day prior, it's been about barely flat. So on the day of, I think it's going to be very, very important. That's again going to be on August 24th is when Jerome Powell is going to be talking. August 23rd, actually. August 23rd at 10 a.m. Eastern on Friday is when Jay Powell is going to be talking. And with an average loss of about 60 basis points in the last 6 meetings at this Jackson Hole Economic Symposium, I think we need to be very, very alert what ends up happening. Also, on top of that, let's talk a little bit about the market streak. We just hit the 7th day in a row. The markets were green. So we're actually going to be making some adjustments to this data point. So if you come over to this streaks data, we're going to move this from 117, so back to 117 to now this being 56, which again has only really happened, very, very low probabilities for us to see this consistent green here at some point. Of course, next week, I do expect some red, and not just any amounts of red, some potential downside in the tune of half to as much as 1% going into or leading up to this Jackson Hole Economic Symposium, or even on the day of. So next Friday, we could be doing a live stream, of course, talking about the market's sell-off. You just never know. So we'll find out next week. Something to keep in mind, but this is a 7-day win streak now for the market, which again is a very, very strong momentum coming in after the last Monday's volatility spike, as we witnessed and of course took advantage of. Now, coming back over to some really important statistics, I also wanted to break down actually the numbers from September. So what I also did was took the liberty of going over the last 13 Septembers for the month, for that month for S&P 500. And what I have for you over here is the S&P 500's performance in the month of September, and volatility's high point and the close in the month of September. So we don't have a very good track record for the last 4 years. So if you take a look at 2023, 2022, 2021, and 2020, so last 4 years all 4 Septembers have been pretty brutal, with an average loss of over 5.7, almost 6%, and an average VIX value of over 30, and an average increase of over 22, almost 23%. So these right here, the last 4 years, have certainly not been good for the markets in terms of the month of September, because September is the worst month for the stock market. And we're only a couple weeks away from September getting started. So that is something to keep in mind. Of course, historical performance is not indicative of future returns. But as I said earlier, September has a very, very low probability for us to see green. Historically, even going back as far as 1900s, because I have this seasonality chart that I created going back as far as 1900s, the 1950s, and 1975, and even 2000s, every single instance, every time you calculate, you just cannot make September look any better, because the probability is really low for the price for the S&P 500 to move higher. In fact, it's only gotten worse as time has gone. And of course, looking at 2000s, we now have only a 45% probability for September to be green, with an average loss of about 1.65%. It's of course even more worse if you look at the last 4 years only. But then if you come back to the last 13 years, so coming back since 2011, you'll notice the average loss has been about 1.9, almost 2%, with the median loss of 1.5%, probability of us going down over 61%. So that is incredibly high probability. And for the volatility to be above 20, it's more than half the times. 53% of the times volatility is above 20. In the month of September, with an average value of just under 25, median value of 20.5. The reason I'm going over this is really important, because right now the VIX has come back down. So if you come over to where we are, we've got volatility, which is right now trading. Let me just bring up the charts here. Just give me 1 second. So this right here is going to be our trading view platform. So volatility at the moment is sitting at just over 14. So we have we have come down very, very fast, very, very quickly. And again, from those highs of well over 65, 77% drop. So the reason why I'm going over that now is because right now we're at 14.8. And if the average value or the median value in September is over 20 to 25, that does represent another potential spike in the tune of 40 to 45%. Something to keep in mind, because a lot of this data is useful. This is going back as far as 13 years, going back as far as 2011, with an average VIX value of 24.9, median value over 20, and at least a minimum 8% increase is what we have witnessed on average in the month of September, with about a 38% probability for us to see an increase as well. So those are some things to consider. Certainly September has been one of the worst months. As you can see, the probability and the returns not really that good. So we are coming up to that level. And of course, next week we've got Jackson Hole as well. These are the readings of where we are. So MoneyVest Index sitting at 3.82 right now. Percentage of stocks trading above their 50-day SMA, 68%. In the 63rd percentile at the moment, and 71% of stocks are trading back above their 200 simple moving average, and that puts us in the 62 percentile. We got volatility, as I mentioned earlier. Actually, I need to update this number, because we are now, as I said earlier, down to 14.81, so even lower. So we're going to be even lower in terms of this percentile, probably in the 30th percentile. The VIX contango is back in a healthy, stable market of 2.73. The PCC ratio is 0.921, puts us in the 47th percentile, and the RSI reading on the S&P is just trading under 60, getting up to that level in the 64th percentile as well. So a lot of these things are flashing red or yellow, which once again goes to show that the risk reward is not that favorable, especially the MoneyVest Index. If you come over to the MoneyVest Index, and we'll go to that in just a minute. This is the contango level, 2.73%. Consumer sentiment also came out slightly better than what the expectations were, at 67.8 versus the consensus of 67. Now, coming over to the MoneyVest Index first, I'll go over that in just a minute. So this right here is the MoneyVest Index, as we already know. As you'll notice that we are sitting at 3.77. Now, this number needs to get updated after the gain from today. It's going to be most likely sitting at 3.81. But I really, really want to highlight some of the best buying opportunities and why this works. I really, really hope that all of you were able to witness this live with us over the last 2 weeks, since last Monday, as we saw the Money Vest Index dip below here. In fact, it was even lower in real time. It was down to 2.85. This was the last time in April of 2024. This right here was October of 2023. This right here was March of 2023. This right here was October of 2022. This right here was March, April of 2022. Every single time there's been buying opportunities for the market. Like, I cannot emphasize why this is so important to understand, because this is a combination of a lot of other indicators that we've already utilized, and every single one of them has been a clean buy signal for us to dollar cost average into. If I essentially combine this with the S&P 500 and essentially show you that, you can once again start to make a lot of sense. This right here, Money Vest Index trading below 2. This is the deep green. This is the deep sea green here over trading at 1.51, which is well under 2. Take a look at the markets, right? All the way down here during the March 2020 sell-off. So that's corresponding with that. If you come over here, this is once again trading down to under 3. This was the consolidation here. And of course, we ended up rallying quite significantly after. This right here, multiple times coming down to those low levels. Boom, boom, boom. 3 times. And every single 3 times, there were buying opportunities. There was risk reward, very, very favorable. This right here is going to be 2023 as well. So over here, boom, you can see that. And this right here is going to be October of 2023, and this right here was the buying opportunity. This is March of 2024, and then of course the most recent last week's Monday's sell-off, and that was this right here. So those right there are the corresponding values and how it has played out almost perfectly every single time you've seen the Money Vest Index come down to 3, 2.5, 2, sub 2. It's been buying opportunity. The risk reward has been very, very good for us, and that's exactly what we like to take advantage of, is these rallies over here. As you'll notice that after the signal or after the alert that's been sent out from the Money Vest Index, it has almost always been very good, very strong buying opportunities. Now, this is not a sell signal. The reason why I say this when the Money Vest Index is low and it is a buying opportunity, so buy over here, but that doesn't necessarily mean that sell over here. So this is a buy signal. That is correct, but this is not a sell signal. And the reason I say that is because markets can remain overbought and overvalued and consistently moving higher for far longer than they can actually stay oversold and trading in a downtrend and trading in a bit of a bear market. So it makes sense for us to buy when the Money Vest Index is low, but it does not make sense for us to sell just because the Money Vest Index is high, because it actually can stay there for a very long time. One instance, if I show you, is going to be this level right here. You can see the Money Vest Index for a long period of time staying above its 3.75 and 4 levels. If you correspond that to where we were, so this right here is the overall uptrend, right, that I've already marked out. So this is the entire uptrend for the market. Had you just sold because the Money Vest Index was trading at those high levels, you would have missed out on this entire rally and then would have cursed yourself for selling. So it's not the same, right? These are buying indicators. This is purely from trading on the long side is what I like to utilize. Now, coming over to Webull. Webull also does a very good job in kind of creating this market sentiment indicator. We're now in 39. We're still in a bit of a fear, according to Webull. And this right here is the overall trend for what they are tracking in the last 1 year. You'll notice that last time we were actually these levels were around August of 2023. And then they're also pointing out to a few more levels, few more times that we've come down to this fear. And this right here being the greed for the market. So once again, there were buying opportunities last week and even this week, and we're now starting to move back higher very, very nicely. This right here is advancers versus decliners. We did see over 3,200 stocks advancing on the day and about 2,400 stocks declining. And the NASDAQ did have over $2 billion of net inflow, NASDAQ composite, and then of course the S&P 500 pushing up over 20 basis points on the day as well. Now, they also put together a list of the institutional most bought and most sold and most held stocks. So these lists show symbols that institutions bought, sold, hold since the second quarter 2024. Most bought list is sorted from high to low according to the aggregate value of shares bought, and the most sold is a high to low according to aggregate value of shares sold as well. And the most holding list is sorted from high to low according to the number of holding institutions as well. So this right here are going to be the most picked up stocks from institutional investors in the second quarter 2024. So the 13F filings that we just broke down, you'll notice that we had a buying bias of 58% for Apple, 60% for Nvidia, 68% for Microsoft, 73% for Amazon. As I mentioned, Amazon was actually one of the top picks for institutional investors. $76 billion worth of buying for Amazon, $160 billion worth of buying for Apple. This is on a full aggregated basis. And NVIDIA, $128 billion flowing into NVIDIA from institutions in the second quarter of 2024. $106 billion for Microsoft, $53 billion for Broadcom, $51 billion for Exxon, $50 billion for Google, and $44 billion for Meta Platforms as well. And a few other ETFs and another company, $32 billion flying in. 99% GEV apparently is a company that actually did witness a lot of buying from institutions. 99% buy to sell ratio there for this company as well. So it seems like it has done incredibly well, fairly new company. So from its March 2024 level, it is up over 60%. Seems like it is starting to turn the corner towards profitability as well as margins are getting better. Something for you to look at maybe. This right here is going to be most sold. So as we already know, Apple at the top of the list. It's kind of crazy that $113 billion worth of sale value and over $80 billion comes from Warren Buffett alone. NVIDIA, $82 billion. Microsoft, $48 billion. SPY, $41 billion. 39% was the ratio, so there was mostly selling on SPY against buying from institutional investors. $34 billion for Broadcom, $29 billion for Google, $28 billion for Meta, and $27 billion for Amazon. Now, the way you figure out whether there was net buying or selling is essentially you take the difference. So $160 billion for buying value versus sale value of $113 billion, and now you get that difference of net additions or net buying activity for Apple from institutional investors. And then again, come back over to NVIDIA. $128 billion minus $82 billion. So now you understand that, okay, there was about $46 billion worth of net buying done on NVIDIA. And same is true for, again, a lot of these companies that are like the top 10. Pretty much every single one of them had net buying as opposed to S&P 500. S&P 500 had a 39% buy to sell ratio. So there was more selling pressure than as opposed to buying pressure, because it's not even on the list here for buying, but it is definitely on the list here for selling. Now, this right here are the most held stocks from institutional investors as of the second quarter 2024. Microsoft at the top of the list. Meta used to be actually the top of the list for most institutional investors that actually hold that company, but Microsoft tops the list with over 5,107 institutions. Institutions as in hedge fund managers, institutional investors with over $100 million of assets under management holding Microsoft. So definitely a pretty big, largest company in the world. 71% of the holding in Microsoft is from institutions. Apple, we've got just under 5,000. Amazon over 4,700. Google 4,400. NVIDIA 4,400. JP Morgan over 4,000. Meta over 4,000. Google over 3,990. So just under 4,000. There's actually been a bit of a decrease. I think Google has seen a significant decline in its rankings for institutional investors ever since there's been the report from the DOJ. Maybe that's something that institutionals may have already known about. Again, this has been going on for some time. And then Berkshire Hathaway, we've got 3,900, ExxonMobil 3,840 as well. Something to keep in mind, of course, some of these names we already knew were going to pop up to the very top, but Google here dropping some ranks, coming down to just under 4,000 institutions that currently hold Google. And if you come further down the list, Tesla is under 3,000, Coca-Cola is under 3,000, Bank of America is under 3,000, QQQ is under 3,000, Oracle is just under 2,900, Verizon is just over 2,880, and Adobe is over 2,833 as well. So Tesla definitely got a lot of work to do to get up to those levels. So this right here is economy at a glance. Policy rate stays at 5.25% and 5.5%. PC inflation 2.5, 4.3% unemployment, and 2.8% GDP growth for the United States, as we have already discussed a lot of these economic factors, because the interest rate cuts are coming. We just don't know when and to what extent. The market seems to be pricing in about 100 basis points worth of cuts in 2024. Again, we'll find out very soon, even as early as next week, when Jerome Powell speaks at the Jackson Hole Economic Symposium. And then, of course, unemployment is accelerating higher, which is also causing a lot of recession fears from the market as well. Now, corporate earnings, 93% of S&P 500 has already reported, and 78% have surpassed Wall Street expectations. The numbers have been coming in super strong. And worst case scenario for Google, so in terms of Google's breakup, Mizuho says that the bar is high. The DOJ successfully splitting up Google, namely search and YouTube, could spell about a 30% drop for the stock from its current levels. And the scenario would have detrimental effect on the advertising business, because search and YouTube share a unified ad system that leverages common technology and data to outperform its peers. So I actually don't believe or don't think that Google is gonna get split up from DOJ. I think this is something that has already happened before. In other words, they've attempted to try to break up Google before, but I think maybe it needs a whole different video, a specific video going over the consequences and what really is happening with this company. So we'll talk about that maybe in another video, in a more detailed video. But right now, Google, again, on a net basis, institutionals still seem to be buying up this company. It's one of the top holdings for institutional investors, and it's a profitable company, very, very strong positioning overall. I picked up Google earlier this week, so I don't mind holding for the time being until we get some more clarity for what is going to take place with this company. So Meta down almost 2%, Microsoft also slightly lower, Apple up, Google up. We had Nvidia pushing higher. Tesla, I believe, was also pushing up on the day. So a little bit of a mixed day, as we already know. Markets didn't really do much. Lots of sideways trade action, but still seventh consecutive day of greens in the markets here. A lot of ETFs flooding in with cash, crypto, international markets, fixed income, bonds, US large cap, small cap, the US sector. Of course, inverse ETFs were down. And this right here, almost all sectors green except for real estate, healthcare, and industrials. In the last 1 week, all 11 sectors are green. And this right here is going to be crypto, just under 60,000, and Ether just over 2,600 as well. So that right there is your full breakdown analysis on the markets. Coming back over to the technicals, what you will notice is the QQQs did see a bit of a breakout above that resistance of $474, $475. If you come over to the 5-minute chart, I was talking about this with all of our Discord members where we pretty much got up to that level, got rejected on the day today, and then of course went back up for a third retest after consolidating sideways all day yesterday. And then, of course, got a bit of a breakout, and then that level started turning into a support. And right now, we're trading above that level. So we'll gladly and happily put that back into a support now for QQQs, for the NASDAQ. So this right here is the overall 30-minute time frame. As you'll notice, we have been trading in a downtrending channel, lower highs and lower lows. But I guess one could argue that we have now finally, albeit a small, but we have created a nice little higher high for QQQs. Again, it's a very, very small higher high because we're barely up from this level from back in August 1st, but technically speaking, it is still a higher high, suggesting for a nice little strength from the markets. But like I said, markets can be choppy, they can be chaotic, and nothing is sort of precise to the T or the decimal. So, we could still be gearing up for a pretty chaotic week here next week if Jerome Powell says things the markets do not like, if there's other earnings or economic data that's coming up that of course rattles the market a little bit. So just gotta be cautious, still be mindful of where we are from an RSI MACD standpoint. Just from overall technical perspective, we are overbought. We are seeing 7 consecutive days in a row. Volatility is really low. Lots of indicators, the MoneyVest dashboard flashing for red or yellow. That means we need to be very careful. I'm going to be looking at selling some calls next week, into this momentum. And I believe that's going to be benefiting a lot when the markets start to rotate back lower and gets further out of the money. So support level is going to stay put at 474, a much stronger support level sitting all the way down to 454. And the next target that we have for NASDAQ, for QQQs, is going to be sitting right there at 487 for QQQs here. SPX also in a very similar trajectory. However, didn't really break out of this resistance as we discussed in our market open live stream as well. So we did go up, but we consolidated sideways at this resistance of 55.65. So that is still intact. These are the 3 levels that we are still watching as an area of resistance for S&P 500. So that right there is going to be that level to keep in mind. Lower highs and lower lows that we're still watching for S&P 500 as well. So resistance, keep in mind, all the way up to 55.67. Support level all the way down to 5,400. And similar to the QQQs, we're still not out of the woods yet. I would be very cautious going into next week, considering the streaks, the reputation that September has, and even August in some cases, and of course the reputation of Jackson Hole Economic Symposium, which has almost always been in the last 4 years not been great. It's been either the day prior or the day of. We have seen some red, and of course not to mention the RSI, the MACD, and the L3 banker oscillator, everything coming up to a technical overbought condition. Volatility here continues to slide lower, so 14.81. So the lower we get, the more cautious we need to be. So if I bring up the percentiles now for the VIX, this right here is where we are on the VIX summary. So we are now in the 14.8 in the 30th percentile, and this is still normal. But the lower we get, let's say we come down to under 14, So the moment this dips below under 14, we are going to switch to a rare occurrence. It's kind of crazy to see the volatility go from a 99th percentile to 25th percentile in a matter of 10 trading days. It is absolutely wild to witness that much volatility here as quickly as it went up and as quickly as it came down. Absolutely incredible. So under 14, we're going to switch over to red, and that's going to put down 25 percentile, and this is going to switch over to rare as well. So hope you all enjoyed this video and a complete update on the markets. I'm going to do a full technical analysis on Magnificent 7 and all the stocks that we usually do on these market updates in another more separate video. Also going to be including SoFi and Palantir with timestamps over the weekend, so that's going to be posted very soon. So hope you all enjoyed this video, found it helpful. If you did, make sure that you drop a like, and of course, a pretty wild week of gains in the market. So congratulations to everyone who's been investing and trading, of course, these markets here and took advantage of the deals that we got from last week. So happy investing. Link's going to be down below if you want to join. Of course, be a part of our MoneyVest community. So always happy investing. I'll see you all in the next video.